Yo, good morning, everybody, and welcome to Powers Plays Palace. What do we have going on early this morning on this chart? Let's get right into it, y'all. Boom, boom. Gap down, big gap down. First thing I noticed this morning. Ooh. Yep. Look at that gap down. Let's look at it. Look at yesterday. Wow, 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 wow. Look at what we see here. Gap down. See that orange line down there? It's one of my previous lines, man. That resistance stuff be wild on it. It's amazing. Hold on one second. Change that to blue. Change that to blue. So if you wonder what I'm doing, these are the highs and lows from previous days in pre-market. Pre-market is in blue. Purple is the previous day's highs and lows. And you keep that data because it's important. On the day of, I will put this white line right here, pre-market low for the day. Pre-market highs right there. So it's about in the same range as previous day. Okay, I'm gonna pay close attention to those. And we're going to do this. Boom. The yellow lines is from the previous day. And what this generally tells me, when you see a bunch of lines like this, is that there's been some ranges that they've been trading in. But since we up here in these all-time high areas, these areas you want to keep track of for now. As they start to make second and third trips up and down, you can kind of save some of them. You can drop some of them off, especially if they're in the same area, like this line here. I'm gonna drop this one off. Why? Because it's right there with my pre-market high for today. And then the ones that are most recent are actually the ones you can consider most accurate, or those are the ones that you want to kind of keep up with. So I'm just checking everything. Okay. So this one can go. And you just kind of clean them up. All right. So with this gap down, that's something that happens sometimes. There's probably some market news that forced it, or some earnings or something. But there's a gap down, so that's something we definitely want to pay attention to, and we definitely want to be mindful of. So yesterday, let's look at yesterday's chart. What we projected was that if SPY met resistance and we could enter around 683.50, 683.20, and we can follow it down, and we should make pretty good money depending on how SPY moves. And yesterday would have been a great day for you if you just stayed in the bull market. I meant the bear market early, and then if you believe in retracements and reversals, you could have made money off of a nice reversal pattern. So let me show you what I'm talking about. Talking about right here. Let's zoom in here real quick. Right here. Okay. Market opens at 9:30. We come up, we hit the high. See that trend line right there too. So we hit this high and then we start to work our way down. We cross through some previous levels. See that? That would have been a pre-market high or a low, or it would have been probably a low, a high because of the week. But we crossed through here, we hit here, and we really tapped these areas and retested all the way down. We get down here to 679.94. And we form a nice reversal pattern. That's a reversal pattern right here. It is. Look at that. That is a reversal pattern. And what happens is it starts to work its way up. Test, break through. Wicks at the bottom usually mean we got buying pressure. And look at us. So we went 6 points down, and we went all the way back up, almost 5 points back up. So you could have made the money on the reversal. The puts paid early, but you would have, did well on the reversal also if you just played it back up also. So overall, I'm gonna say that was a good day. We saw it, we knew where we were going with it, and then we were able to capitalize on it. Okay, let's look at for today what we have here. So, overnight looked like we lost that momentum with this new pre-market range of 673.79 to 678.63, which puts us well below yesterday's low at 679.94. So these key levels right here, these setups, and I'm gonna show you what I'm looking at. And again, this is not financial advice. So, you trade at your own leisure, but this is what I'm looking at. So because yesterday held around 680 most of the day, we had a high about 685.80, which was the high. But then overnight, like I said, we had this gap down. That's something to look at, forming some real support down here in this 679 range. Come back, and then we in that range, but now we went down around 673.79, which is that low area. So we want to definitely be mindful of that, and that's right there in 674 range. So that's what we can call the 674. So if SPY goes above 678.63 and closes with a strong 5-minute candle there, that's a good place to enter around 678.70 to 679, and with the stop loss being at 678, with my target prices being 680, 681, and 683, and that will help reclaim some of what it lost overnight, and that's a pretty good setup if it comes back up and it fights that gap and it closes that gap on the way back up, which oftentimes does happen. So be mindful of that. But if we push up and stay in the 678 range, and if we push into it, and it fails to hold, then we'll probably look for a short entry around that area with a stop above 679, with the targets being 670, 650, 675, and 673.80. And that's with the failed retest of the previous, the pre-market high you definitely want to look at, and you want to see if it tries to close that gap. But if it goes up and rejects, that's small candles with wicks at the top, and you start to seeing the buyers coming in, the sellers coming in on that pressure, then you definitely want to see about getting in those puts, and then that's what I'm looking at. And you look for them weak candles and lower highs on the 5 minute, because that's what I trade, or the 15 if that's what you trade. And you just be careful of it. Lower highs, lower lows, lower highs, and then you'll see the market kind of follow that. So what I'm gonna be looking at is the range between 674 and 678 at the open, and looking for some confirmation candles around the 5 and the 15 minute candle, and some volume. And that's the way I'm gonna look at before I take a trade, and try to keep a tight stop loss, and be careful, man, because the market can be very, very volatile. And when you trade in the spot, it's always a risk. But, once you get in, you win it. And be careful. Put your stop loss in place. Do not free will with this stuff. And then scale out, man. When you rise up 25, 30%, take your money. Take you some money. Keep you a runner in there. And then keep doing what you're doing. Because if you see these these big gaps form, I can tell you sometimes they can close them, sometimes they won't. But either way, that's a market reaction, which causes that a lot of times, and you want to be very careful when you're trading that. So that's our SPY trade plan for the day, Tuesday, November the 4th. And if you just want to be one of the people that trading on the SPY, 6, 7, 8, 63, if it's above that, try to close that gap. I'm looking at, a range of probably 681 to 683. And if it's below 673, 79, and there's no strong buying pressure, I'm going to look at possibly it could run all the way down to 670, 50, and possibly 669, because you just never know. But you trade your plan, stay disciplined, protect your profits. And then what you do is you prepare for, the good and the bad, and do your thing. Now, if anything in this video helped you, or if you feel like, it's something you want to follow us daily here at Power Plays, you can more than welcome to do that. And like, share, and subscribe. And then join us at Power Plays, where we actually trade every day, and we'll have some fun in there. But this is not financial advice. These are some ideas from me, from my group. This is how I feel, and I'm sharing it with you all. And so we'll see what happens. But lately, if you follow the chart, and what we're talking about, you should have been able to make profit almost every day. So we'll see if today we can keep that streak going. All right, y'all. We out of here.